Tirthankar, going to quickly come to you. 7,000 anytime soon after the gap up that we'll already see today?
I want to, but I can't. I mean, from a top-down perspective, I see a weak macro, and I think that's going to drag things down a little bit. But there are indicators that one would be very carefully looking at over the next 2 days, and that will sort of give us a better picture.
Tirthankar, if I just look at the fundamental picture, nothing has changed. Just because BJP has made a comeback, that will not change the earning momentum, it will not kickstart the investment cycle, it will not fix my GDP, it will not fix my macro concerns. So what is the excitement all about? SGX is up 200 points.
I mean, a good part of what has hurt India, other than inflation, has been this, intransigence about work, about investment activity not happening, decisions not being taken. It's a very intangible aspect of things that has plagued India over the last 2-3 years. Market is expecting that such things will be given the pass over once Modi comes into power or BJP comes into power, and when basically there's a change at the center. So I think that's what the major part of the optimism is all about, not the macro part. Inflation remains weak, fairly high. GDP growth remains weak, but what people are not doing, project approvals have happened, and yet, investment outlook has not really changed much. It is that intangible aspect that people are sort of looking forward to with the change in guard.
Tirthankar, how much of today's price action in currency is sustainable?
I think the currency has seen a significant amount of move today, basically going on the same positive vibes that we've seen in the equity markets. Our read is that we've seen about $34 billion of money come in on the FCNR side, and what banks have essentially raised. So FCNR money was about $26 billion. If you see the latest RBI figures on FX reserves, they've gone up by about $5 billion. This was Friday evening news. So clearly a good amount of money is coming in, and our read is that at that point even the rupee had remained about 61 to 62, in terms of actual flows really happening in. The call here is that currency will not strengthen much stronger from here, much more from here, unless there is a sentiment change. From the macro perspective, I think 60-61 is where currency should sort of top out. Point there is if things continue to improve on the sentiment side, you might see a sub 60 number, but we think it's unlikely. So I think currency is where it is actually. We believe that it will not strengthen much further from current levels. Just wanted to add another point here. As our derivative desk was pointing out, the strong performance of the currency will also lead in a lot of ARB desk people back onto the markets, where NDF market has seen hedging costs come off to about 80-90 bips from about 150 odd that we were seeing during August-September. So that itself should be a fairly big positive for the equity markets as well.
If I look at the institutional ownership, a lot of institutions are overweight IT, pharma, and they are extremely underweight PSU banks and cyclicals. Do you think because of rupee that trade will reverse?
See, you're asking about domestic and foreign, I presume. So let me take it piecemeal. Domestic money, as you rightly pointed out, has seen basically sell-offs coming in. Every time the market has seen peaks, we've seen redemptions actually basically rising. So one indicator that I was talking about earlier is that if one sees redemptions not really happening over the next 2-3 days, 4 days, when you don't see mutual funds seriously bleeding, that itself would be a big positive support for domestic money to keep coming in. So the whole feature that we've seen by mutual funds actually selling off at any market high might just stop, which will be a big positive support. For the foreign institutions, the picture is a bit more nuanced. The money will come in. A lot of money has been waiting in sidelines. Our conversations with clients tell us. And what would essentially happen is, today India dedicated funds would see more capital coming in. There is no doubt about that. For the EMs, however, one has to look at a slightly more nuanced picture. India is not the only country with elections in the EM space. As one client told us, there are about 5 more countries which have elections coming in. So there is a bit of bit of some uncertainty there. At the same time, developed markets have been doing fairly well. So you might see EM money basically seeing a little bit taking a step back in terms of actual inflows coming into India. And let's not forget that after the third plenum in China, the addressable universe for foreign investors in China could actually go up meaningfully if the Asia market really opens up. So on the foreign side, there are other dimensions beyond India that's sort of working out. In terms of institutional ownership, I think December quarter would be something that we'll watch very keenly. A good part of second quarter earnings, second quarter performance was also based on the festive season, which is not going to be there in December. So one would see earnings there, one would see macro performance there to really take a call in terms of if institutional ownership does really change in terms of sector allocation. Not at the moment though.
Okay, tread with caution, says Tirthankar. Tirthankar, always good chatting with you. Appreciate you taking the time out and speaking with us.